Check, please.
Welcome back to Everything Money. In this video, we're talking about the concept of higher rates, Paul. This scares me. I don't want high rates. Normal people out there, I want low rates so I can refinance my house. I want to borrow money so I can do stuff. I don't want high rates. Tell me why I'm wrong.
First off, guys, follow us on Instagram, Everything Money Investing. And the second thing I want you to do, it takes 2 more seconds, follow Seth Moe and I, because it really helps us feel good about ourselves when we see our followers go increase. That was sarcasm. Higher interest rates. This is a historical chart of the last 54 years of the 10-year treasury. 4%. I think historically, going back like 150 or 200 years, our average rate on the 10-year is 4.4%. I believe I saw that somewhere. I did the math. We're currently at 1.8, 1.9, wherever we're at, 1.78 as of 3 days ago. We got as high as 15.5% back in the early 80s.
Now, these are the Reagan years. I've always heard Reagan's to blame for these high rates.
So he did increase rates with Paul Volcker, but why did we do that?
I have no clue. You got to tell me. This is the channel, Paul. You know.
Okay. Oh, I thought you were the genius here.
Well,
I just called myself a genius in a backhanded way. Just see how I did that?
If you want to talk about magic cards, I can just...
Chemistry.
Go on.
Interest rates are the Fed's way of regulating the economy in a sense, okay? If prices grow too fast, which are right now in inflationary times, how do you get prices to slow down? Well, Seth just said in his statement, I want low interest rates so I can go buy stuff, borrow money.
Yep.
So if rates are higher, do you buy and borrow less or more?
Less. I can't do it. Why would I refinance?
And that gets costs to go down.
Costs?
Yes, because if you're buying less stuff, they need less employees. Less employees, lay people off. Less income out there. All of a sudden, before you know it, income start to go down.
This all sounds bad, Paul.
It does sound bad. What sounds worse to me is an economy that just go, 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 go. Guys, it's just like getting sick. Getting sick is okay. It allows your body to recharge. It allows your body to build up antibodies and other things to fight other future diseases, right? It's okay for recessions to happen. Slowdowns are okay. Right now, it's really hard to buy a home because you put a house in the market and all of a sudden, before you know it, it's gone in like a week or 2 days.
Yes.
This exuberance, this irrational exuberance does not bode well for economies. We want steady. We want steady growth. When you have low rates, everybody's buying, everybody's borrowing, you put too much debt onto things, all of a sudden cycles are going to happen. There will be a time when rates are higher. When that happens, if you had a lot of debt at low rates and also to refinance that debt, you're screwed. If you go from 2.5%, all of a sudden rates go higher 10 years from now, you're at 6%. If your income hasn't gone up a lot, that's over double your interest costs have gone up. And when economies falter, this is what happens. It's kind of like...
Well, you lick your chops at this. You love this.
I like it because...
I'm just scared.
I don't like the fact that everybody who's a 17-year-old pimply kid can make a lot of money because interest rates are lower and it justifies higher prices for things and makes them feel like geniuses.
Someone would say that's just harsh of you and that everyone should be allowed to make a bunch of money.
Oh, everybody's allowed to make a bunch of money. Anybody in this world should be allowed to make as much money as they want. But when everybody's making a lot of money, there's a disconnect.
You said it to me, Paul, like, what if it was easy that everyone got the PhD in chemistry that I got? What would it do? And I think we've actually seen that with like a 4-year degree from college, right? We went from a generation where you have to go to college to now like going to college is sort of normal. It's kind of,
I always said to people,
normal.
If everybody in the world had a PhD, we'd have PhDs working at McDonald's.
That's true.
Right? Mo, why'd you chuckle when Seth said that?
About the colleges.
About the colleges, every 4-year degree.
Because everybody has a 4-year degree now, and look where we are. We saw
the same problems we had 50 years ago.
Exactly. This whole push for education, get a job, education.
They can never take it away from you.
Now we got people that are working at Walmart that have a college degree, and
if I had said to you 25 years ago that everybody having a college degree and borrowing money to go to college would be a bad thing, you would have said you are absolutely crazy.
Yep.
And now what are they trying to do?
You would have said that 5 years ago.
Yep. And now what are they trying to do? Cancel student debt. Why? Because I was lied to. I was told that if I got this degree, no, you were told if you got a useful degree at a reasonable cost, you'd probably do well in life. But what you did was you went to a $60,000 a year liberal arts college to get a degree on basket weaving. And when you realized the basket weaving market wasn't what you thought it was going to be and you have $400,000 in debt, you had a problem. That's what it was. As Buffett and Munger always say, every bubble starts with a very reasonable and good assumption. Education will make your life better.
And that's a very reasonable assumption.
Yes, it will. It's been proven time and time again. The more educated you are, the more likely you are to be financially secure.
I don't think, I know for a fact, we know that young folks who are either investing in a house or investing in stocks, they've never seen this downside
And that's
risk.
what creates problems.
You do the stock analyzer tool and they just argue with you in the comments, Paul, you're too conservative. Why would the PE ever be that low?
Great.
Why can't
It's
we
the only
assess
time
a
they've ever seen
33 PE? Why would you do 12?
The only time they've ever seen that, it lasted 6 weeks of their life, and that was in April of 2020.
I have to explain to my sister, she bought one of those houses. She put in, she had to get her offer in within 5 hours of opening, listing. And I'm like, what happens if you pay $320 for a house that unfortunately in 2 years is worth $170?
So the example I always give, I got asked recently by somebody who bought a house in Miami, Florida for $425 in 2006. Guys, go look at the population of Miami since 2006. It has skyrocketed. The real estate market in Miami was going gangbusters in 2006. If I had told them that 16 years later, it would take a great real estate market for them to sell it for $375, what would they say to me?
No chance.
No chance, Paul. You're wrong. You're an idiot, too conservative. That's exactly what happened. She just sold it last year for $375. 16 years later, and it took this real estate market for her to get $375. She said at one point it was worth something like $225.
Look at New York right now. You couldn't pay enough money to be in New York. It was the best place of all time, and now it's not.
So the reason why I want higher rates is I like the reset.
Yeah, but is this just a wealthy guy talking down to a bunch of normal people, that the reset who's going to hurt a lot of us?
Well, it does suck. My girlfriend Lisa says, Paul, doesn't it suck that you have to make a lot of money when people are doing that? I'm like, I get that.
That's it.
But the reality is it's going to happen anyway. It's going to happen anyhow.
Happen. And it's a part of it. When we get to these when you do these irresponsible things and it goes to the pendulum. When you have the pendulum like this, if you're going to swing all the way to this euphoric side, you have to swing back. Maybe it won't go to this extreme.
No,
it's going to fall in here.
It'll go to that extreme. The pendulum goes back.
To. That's why I think if you just let recessions happen, here's your pendulum. It goes like this, and maybe you swing here and here, and you just stay in here instead of going here and all the way over here. We don't have to talk about depressions. All we have to do is talk about normal recessions to reset things. It's bad for a little while, and we come back.
So, guys,
this is where the normalcy and we sound bad because we're the wealthy people saying this, but we're also the wealthy people saying we should not be having this and having this. We should have responsibility that should stay right in here.
Hey guys, Seth here, jumping in real quick. We'll get right back to the video, but I want to let you know you can join our software. You can get access to this financial data and the new Everything Money chat right in your phone. Paul will tell you how to get it right now.
So guys, we created the software because our users wanted to be able to analyze their own stocks without having to wait for us. So we put hundreds of $1,000s, made the software. You get 30 years of financial data. You get access to Seth, Mo, and I, 8-pillar analysis, the stock analyzer tool, the retirement calculator, and you get everything on this main page that is coming soon. This is all included. And if you look right here, these are all the things you get. You get everything on a mobile phone. Everything we're talking about here is ready, available on your mobile app. One app for everything. But most importantly, guys, you get our Discord, our community of, now it's off of Discord. It's right in our app. You get a community of over 6,000 people you can talk to every single day about your investment ideas. If you're like them, you felt alone having these ideas about investing that weren't reciprocated by others, but now you found the community here. And this is all available for only $1 per day. Less than a cup of coffee. If this can make you 1 or 2% or save you 1 or 2% of losses every year, it will lead to hundreds of thousands, if not millions. $1 per day, 2 ways to sign up. Everythingmoney.com or Patreon. The benefit of everythingmoney.com is we're not large enough yet to charge sales tax, so you won't be charged sales tax quite yet. And look at this, guys. You get all of this. Our competitors are a lot more money and don't provide as much. $1 per day. Go sign up now. But this is the price. This always has and always will happen. All I'm telling you is, do you want to buy here or here? I'm telling you that this is like the economy. This is what happens when you have really low interest rates for long periods of time. And then this is what happens after. Mm-hmm. It's going to happen. The question is, do you want to make the best of it or not? It's not like I can stop it. All I'm sitting there saying is I'm going to assess the world and make decisions based on that, just like you are. And you're going to tell me I'm wrong and stupid and dumb because I don't buy Tesla, Bitcoin, Square, and all these ridiculous companies. Great. then I have the right to say, when it is bad, hey, remember how you said I was dumb? Who's dumb now? Interest rates being low. It's fun. Listen, I love it. My real estate prices have gone through the roof, but guess what? I also am not buying anything. And guess what? I put more money into my real estate than any other landlord I know. So you're telling me the guy who invests back in the community, I sold a big property in Shaker just 3.5 years ago. It has gone to shit since then. So to everybody in Shaker who I sat there and said, hey, you guys sat there and said, Paul, do this. I was just done with it. I'm fine. Taxes are too high. I'm out. And people said, oh, you shouldn't be worried about the taxes. Great, I'm out. Guess what you have now? You have a slumlord. Congratulations. I just made a decision based on the market. That's it. True. That's all I did was make a decision. But you have the right to make the exact same decision. You have the right. Just like when interest rates are low, you have the right to make a decision of taking on a lot of debt. But that means if interest rates go up, which will happen, you have to pay for those decisions. It will happen. I'm just saying, be reasonable, be smart. Don't risk what you have for something you don't need. That's it. And we need this reset. We need so that kids in high school aren't the geniuses that we all think they are, because they aren't. I was a really smart high school kid with money. And I look back at that guy and go, I want to punch him in the face and say, don't do this. Mm-hmm. And I was one of the smart ones. I wasn't the pimply kid golf caddy. I was one of the smart ones, and I still didn't know what I was doing. And 20 years from now, I hope I look back at today and say, oh my God, I didn't know what I was doing, but I guarantee it won't be hype. That's the thing, guys. These cycles are going to happen. I'm asking you, which side do you want to be on? When we have very, very low interest rates for a long period of time, it usually doesn't end well. The country has more debt than it's ever had. Go look at the numbers on the amount of debt, and go look at historically what happens when countries have a lot of debt. When companies have a lot of debt, what ends up happening? Margin accounts on brokerage accounts. Through the roof right now. Through the roof. Go look at history when margin is up. What happens to stocks afterwards? Because guess what happens, guys? When interest rates are low, people borrow money because stocks are going up, interest rates are low. Oh my God, I'll just borrow against my stocks to buy more stocks. When stocks start to fall, the bank will require you to sell. It makes stocks fall even further and even further and further. So the time you should be buying, you're selling. That's what debt does to you. That's why we need higher interest rates. We need this to happen. We need to weed out all the crap and get back to normalcy.
How do I prepare as a viewer at home? If I'm buying into everything you're saying, how do I
put reasonable amounts of debt in your house? If you don't need to move, don't move. Don't go borrow against your stocks to buy more stocks, and keep buying an ETF month in, month out, and never blink. Never waste your time ever worrying about the other stuff. If you want to learn a process that makes sense on other videos in this channel, come learn. And when times are better, you will be very well prepared. That's it.
If this approach speaks to you, you can join our community at everythingmoney.com, at patreon.com/everythingmoney. You can click the videos below to see our 8-pillar process when involving stocks. But Paul, you said it. That's just basically that's the gist. I mean, don't overspend, buy an ETF, set it and forget it. I mean, you're not going to get in trouble with the trade commission because you're peddling penny stocks and telling people what to do. It's a very careful, disciplined approach.
Teradyne.
Where
that's from?
Wolf Wall Street,
right? Aerotyne. Thank you.
Aerotyne International.
Very interesting company there. I have a new, I don't know what they do or something like that. It's like this little shed in the back of somebody's house.
Yeah, don't invest in it.
Mother answers the phone. She's such a nice lady.
Yeah.
That's our take. Watch more videos. We'll see you in the community. Thanks for watching.